The tax code revisions also seeks to enhance the well-being of the lower and middle classes, as well as future generations through more tax incentives. Our Lee Soo-jin tells us more.
South Korea's revision to the tax code this year includes measures aimed at boosting the local economy. The latest tax revision published on Thursday by the Finance Ministry seeks to expand tax benefits not just for newlyweds but also for the lower and middle classes.
We plan to increase support for the lower and middle classes to help the private economy recover quickly and to actively address structural issues such as the population decline.
The most highly anticipated tax revision was arguably the tax exemption on funds gifted by parents to their children when they get married. The government has decided to expand the threshold from $39,000 to around $117,000 for inheritances given by parents to their children 2 years before or after the date of their marriage registration. In a more direct move to help boost birth rates, the government will also increase payments provided to families from around $620 to around $780 per child. The income limit for families eligible was also raised from around $31,000 to nearly $55,000. In addition, taxpayers can qualify for tax credit rates that amount to 15% of medical expenses that exceeded 3% of their total income. The tax credit limit of around $5,500, however, will no longer apply to children under the age of 6 starting next year. It's also not just people that are benefiting.
VAT exemptions will be applied to more than 100 types of pet medical expenses starting October this year.
The government is also looking to improve people's livelihoods. It will raise income tax deduction rates by 10 percentage points for credit card expenditure between April and December next year at traditional markets and on recreational activities. The 2023 tax reform bill, which will be submitted to the National Assembly in September, is expected to go into effect next year. Lee Soo-jin, Arirang News.